Hello and welcome to What Goes Up, a weekly markets podcast. My name is Mike Regan. I'm a senior editor at Bloomberg.
And I'm Valdana Hayek, a cross-asset reporter with Bloomberg.
And this week on the show, well, just when it looked like the crypto market had stabilized following the massive blow-up of the Terra ecosystem earlier this year, here comes another big blow-up. This one arguably more surprising and even more systemically important to the whole industry. Sam Bankman-Fried's FTX Exchange. Now, before this, he and his firm were long considered one of the most stable cornerstones of the industry, with the 30-year-old billionaire known as FBF even being described as the JP Morgan or Warren Buffett of digital assets. Even if you've never even dabbled in crypto, you've probably watched FTX's funny Super Bowl ad with Larry David, or seen FBF palling around with Tom Brady, or maybe you noticed the FTX logo on the chest of Major League umpires. So what does it mean for the market when such a high-profile pillar of the industry collapses in a matter of days? We'll get into it with the chief executive and the chief investment officer of a quantitative crypto hedge fund. But first, Valdana, before every podcast, you write down like 47 questions to ask.
I have so many.
So many questions. Now, we actually had SBF himself on this podcast, and I noticed you never asked him like, hey, SBF, when's your thing going to blow up?
Well, but that's the thing about his whole company is that everybody thought they were going to be, they were like the gold star, right?
And I'll confess, I had Do Kwon on the podcast one week when you were off.
I remember when I was off.
It did not occur to me to ask him,
oh my gosh,
when's your thing going to blow up? Hopefully no more blow-ups.
I'm blushing.
We've had enough blow-ups.
People can't see me, but I'm blushing.
But you know what? The thing is, in crisis, there's opportunity. When stuff blows up, sometimes traders make the most of it.
Yes. I do want to bring in our guests. This is the perfect week for us to be talking to them. I'm really excited to have them on. We have Sadie Raney. She's the co-founder and CEO of Strix Leviathan, and Nico Cordeiro. He's the CIO at the company. Welcome to both of you, and thanks so much for joining us on this week's show.
Thanks for having us. It's really nice to be here despite this week.
Likewise, great to be here.
It's definitely a rough week, and I do want to get into all about you guys and what you do and how you're faring and what this week has been like for both of you and for your teams. But maybe, Sadie, we just start with you, and I'm hoping you can just lay out for our audience what exactly happened this week. What were some of the major factors, the major players involved?
So, great question. I think that's actually the question that everybody's trying to figure out right now. What did happen or what is happening? And the big issue here is really, I don't think we have all the pieces of information. And really it started at the end of last week when there was some back and forth between Binance and FTX on Twitter, and there was a lot of, allegations going around, which there was an immediate response from FTX, kind of that everything's fine, we're all fine. And then suddenly, there was very clear signs of distress for FTX in the market, and Binance came forward with an offer to acquire or bail out FTX, more or less, which was very quickly rescinded. And in that whole process, there was a large run on FTX, which dried up their liquidity, leading to them freezing withdrawals. And now there is a very aggressive attempt by FTX to find a solution to their liquidity so that they can make their investors whole.
I'd be curious did this catch you guys as much of a surprise as it did the rest of us?
Yeah, it did, to be frank. The speed of which we turned from, small rumors on the internet that didn't seem to have validity into FTX freezing accounts was all in a span of about 36 hours. And like you mentioned in the opening, FTX was largely considered the most trustworthy institutional player in the space outside of the U.S., so not including Coinbase and others. I think it was quite a shock. And a lot of folks are surprised and angry, rightfully so.
Yeah, and Nico, I imagine and Sadie, I imagine it's impossible to run a crypto hedge fund without having some sort of exposure to FTX, either as a client or counterparty in some way. Is it creating any issues for you guys?
Yeah, I mean, it is difficult to not have exposure to them. Within the U.S., preferably we'd like to keep our capital in the U.S. under U.S. regulated exchanges. But if you want access to derivatives, perpetual futures, and capital efficiency through the type of instruments that are offered offshore, you have to be offshore. So we were there. We're a counterparty to them. We do have some funds frozen there. It's not the best of situations, but luckily for us, we are, place a large emphasis on risk management. And so we only had a small portion of our portfolio allocated there simply because this space is the Wild West. And, you expect these things to happen, just not to FTX.
Yeah, any communications or indications of when and if you'll be able to withdraw funds?
At this time, it's a very fluid situation. We're not sure, what's happening behind the scenes.
And Sadie, maybe you can talk about just the significance of the events, because we've been talking about how it's been a rough week. Obviously, crypto markets tanked. At one point during the week, it seemed like the horrible sentiment from crypto also had spilled over into the equity space, where we saw the S&P 500 also selling off. Just what is the significance? Like, how momentous of what unfolded over the past couple of days? How momentous is it?
It's really momentous in this situation. We've been through a number of market crashes, and in the past have also traded with Voyager, or we've used Voyager, not for trading, but we've used Voyager in the past. We also used BlockFi, and when there were some indicators that maybe they were, I guess you could say, over their skis, we stopped trading with them, well ahead of what happened last spring. And this one, I don't think anyone saw coming. It was really quick how it happened. It was really fast. And I was actually speaking at CoinAlts last week up in San Francisco on Thursday, ironically. And one of the topics I talked about was risk, and how, the reason people love this industry is because the crazy returns you can get, but, you pay for that with risk, and you have risk across every avenue, and counterparty risk is just one of those risks. So you really have to make sure that you're looking at, all the areas out there, and you're never literally putting your eggs in one basket, because you can never be sure at this stage that everything is what it looks like it is on face value.
Was it also much more shocking, considering that we basically had like weeks or even months of a very, I guess we could call it a calm market, where we really didn't see prices surging or plunging in any way, but just like meandering for a really long time?
Yeah, I mean, that's exactly correct. I mean, from the outside looking in, it looked like crypto was stabilizing, had sort of forming a foundation from which to find strength after the chaos of May and June. And things were starting to trend, upwards again. Things were starting to look like crypto used to look in the early bull markets. And then obviously everyone was sidewiped by this revelation that, very few, if anyone, saw coming.
Sadie, I know sort of one of the appeals of quant investing is that, you let the math do the work and you sort of take out the human emotion of things. So this strikes me as something that, even a quant strategy is going to struggle with, just such an out-of-the-blue occurrence. So I'm curious if you could talk about some of your strategies. I know you have a market-neutral strategy that, in theory, should be able to weather a type of collapse in prices like this better than a sort of a long-only or levered-up long strategy. How does this type of event affect a quant? Is it the type of thing that you're just, as clueless as everyone else, or is there something about being a quant in this space that allows you to navigate it a little better?
In general, yes, I definitely believe we can navigate a lot of these incidents much more efficiently than a lot of our comrades out there. But really, quant is non-human. It's looking at the data. It's trusting the data, but you have to set up your system with a very risk-oriented mentality. So the computer can only be as good as you let it be in those situations, and you can't just listen to everything that your signals say. You have to set it up so that you mitigating risk. You always have to have multiple counterparties in this industry. You can't trade with just one place. You also have to make sure that you have, we set maximums for any one counterparty. So even though prices might be the best and trading might be the most profitable with one exchange, we're not going to put 80% of our funds there. We just won't. We're not willing to do that. And so our portfolio has limits per trading partner. It has overall limits for signals. We are a long short fund in our main fund. Our system will only go to a certain percentage short. So, doesn't matter what the market looks like. And if all of our signals wanted to short, we still wouldn't short. We'd only short up to the threshold percentage. So, you have to really make sure that your guardrails are set in place for a quant fund. And then, having different strategies definitely helps. Having a market neutral DeFi fund helps. In this situation, having, our DeFi fund was, has, so far been completely unaffected by this because it's self-custodied using decentralized exchanges. So we don't have the centralized party risk of somebody mishandling our funds without us knowing it. So the system, though, again, just being repetitive, but the system's only as good as what you train it to be.
I'm sure you guys don't want to sort of give up the ingredients of the secret sauce or anything, but I'm curious what sort of some of the main elements are of your strategies. And I'm guessing trend following and momentum plays a big role.
Yeah, in the flagship fund, that's correct. We have systematic in nature, takes directional exposure both on the long and short side. We have a mixture of trend, momentum, cross-sectional momentum. So really playing relative value across the assets that we trade, as well as some idiosyncratic signals that we found about unique market structure within crypto. Would pick up the bulk of the systematic fund, and then on the market neutral DeFi yield fund, that's largely driven by yield opportunities with a heavy risk overlay, being able to hedge out crypto beta exposure in a crypto native way entirely on chain without having to interact with centralized counterparties.
So, Nico, can you actually talk more about your market neutral fund? Because this is something I had been writing about over the summer when, and also earlier in the year, we had crypto prices crashing in May and June. And what market neutral strategies do is they tend to hold up better during those times, right? So maybe can you just lay out for our audience, what is a market neutral strategy and how is it faring during weeks like the one we just had?
Yeah, so market neutral in this sense is we have some exposure to crypto price movement through the assets that we're holding within a variety of decentralized exchange and other DeFi protocols. But then we utilize hedging strategies to net out that price exposure. So that way, if Ethereum goes up 20%, our long holdings in Ethereum also go up 20%, but our short exposure goes down 20% and it kind of nets out. There's more to it than that. It requires real-time rebalancing to account for impermanent loss and other issues that arise on decentralized exchanges. But in a nutshell, that's how it works.
So does this event this week, will it change your strategies going forward, change the way you do business? It sounds like in a way you were, sort of prepared for something like this to happen, limiting your counterparty exposure and that sort of thing. But is there a lesson learned that you'll carry forward from this week's events?
I mean, for one, we'll probably reduce our individual exposure to any one counterparty even more. It gets difficult because there are not a lot of large exchanges with good liquidity that you can trust. And then we've also started the very initial conversations of around, okay, do we take our flagship fund and only interact on decentralized options to mitigate the centralized counterparty risk? So that's early stage discussion, but because we run a market neutral DeFi fund, we have all the technical infrastructure in place to self-custody our flagship fund and only interact on chain.
And Sadie, maybe you can just to go back to the basics, basically, tell us more about you guys' company, how you got interested in crypto, and maybe you can even fold in a bit about your background and Nico's background, because you guys both have very interesting sort of past lives before your crypto lives.
Sure. Happy to kind of give a little more color about our background. So I'm the co-founder of Strix Leviathan, and originally founded the company with Jesse Proudman about 5 years ago. And I met Jesse when I went to work for him at his last startup, which is a private cloud company. I was the financial controller there. That company was acquired by IBM in 2015. So I stayed on, led the integration of the accounting and finance and operations teams into Big Blue. Didn't really love going into a 360,000 person company after being in a 60-person startup. And Jesse was a distinguished engineer at IBM. So he ended up in their blockchain group and really fell down the crypto rabbit hole, as we all do. We'd stayed good friends, so I knew he was getting more and more into crypto and, dabbling in mining and trading. But then really got passionate about trading, and as a technologist, felt like that was a huge opportunity. So he approached me towards the end of 2017 and said, "Hey, I've got this business idea. What do you think?" He knew that we needed to have structure and operations and legal and compliance, but that's all stuff that he finds as exciting as watching paint dry. So he's like, "Hey, do you want to do this? I know that's kind of your wheelhouse." So that's how we started, was really looking at trading in the space and, individually trading. Back at that point in time in crypto, it was impossible to capture any kind of gains efficiently. You could see the price discrepancies across different exchanges, but by the time you could actually execute a trade, there was no profit left in it. You couldn't trade by API, or if you did trade by API, trades were dropped or double filled, or would look like they weren't filled, and then 2 days later they'd show up as completed, and so it was just super inefficient. So we decided to launch a fund with actually Jesse as the main investor to start, and some of his friends, and then built the trading technology at the same time. Launched the first fund in April of 2018, and by then realized that our technology was just as valuable as our fund methodology was. So, and stepping back a little bit, after we formed the company officially in January of 2018, we realized we needed somebody with much deeper finance skill set than we had. So that's where we were introduced through a friend to Nico, and it was as soon as we met Nico, we knew like this is the person that we're going to grow this company with. So he joined really early on as well. So when we went live in April of 2018 and bought our first Bitcoin, which the price at that point in time was $9,000 or thereabouts, Nico was there, placed our first trade. So it's been pretty awesome to have him at the helm since then.
Yeah, Nico, why don't you take it from there? How did you end up in this rabbit hole? What's your backstory?
Yeah, absolutely. So how I ended up in the rabbit hole of crypto is I used to be in the U.S. military, spent some time over in Iraq and Afghanistan. It was around 2010, I think it was the first time I read about Bitcoin. I did not put everything I had into it, or I'd be retired on an island right now. But I was entirely fascinated by this concept of decentralized currency that had no intermediaries and no overarching control. I mean, it was very hard to sit in Iraq and looking around at the complete collapse of their infrastructure and not see the value add, which is not as easily visible from the streets of the U.S., where we don't have to worry about those things.
I'd like to rewind a little bit and get back to the idea of DeFi. As you point out, I feel like DeFi has a bit of a told you so moment right now after what happened to a centralized, huge, important player like FTX. So I'm curious, where are the opportunities in DeFi that are most exciting to you guys, and especially in the notion of yield farming? I feel like that seemed to get pretty toxic after the collapse of Terra and its anchor program. So what is yield farming too risky these days, or are there places where it's still attractive? And sort of what projects are you finding the opportunities in these days?
Yeah, definitely had an I told you moment here, right? Because everybody who operates on DeFi is sitting with their own capital in their own self-custodied wallets and not worrying about some third party scurrying off with their funds and doing illicit things with it. So definitely an I told you so moment. In terms of yield farming, there's still plenty of opportunities out there. I mean, we're very early stages. I know at this point, Bitcoin's been around for, it's been almost 13 years now since the white paper originally came out. But all of these additional use cases around decentralized finances are still in their infancy. So, if the trillions of dollars of global economy, even if it captures 1% of it, the opportunity is still quite massive. And so the opportunity still remains, and we're still pretty bullish on it.
Nico, can you talk a little bit more about what you guys are doing right now? Maybe you can give us just a bit more specifics. I know in the notes you had sent to us, which granted you sent before everything happened, but you said that there are potentially some areas in the space that are undervalued. So can you just tell us a bit more about that?
From an undervalued or overvalued perspective, like one of the reasons we built the system we did on the flagship fund is because like that is an impossible number to peg. Should Bitcoin be $1 million or $1,000 or less? Like no one really knows, and it's dependent on future idiosyncratic events involving decisions by governments all around the globe. So it's extremely difficult to put a number on that. Undervalued in the sense that I think people are writing off DeFi after the last year and a half because of the blowups and the collapses and the amount of money that has been lost is where things are undervalued. These systems are in their infancy. They're not user friendly, but if those problems get solved, there's a ton of value in removing intermediaries and creating a more frictionless, financial system. And again, this goes back to discovering this when I was in Iraq. Like this means a lot more to somebody in Africa or the Middle East or other parts of the world than it does to us sitting in America. Like I'm not particularly concerned about my bank going to $0 and stealing my money or the U.S. government, collapsing in the next 5 or 10 years. But that is a really real concern for many people around the globe.
What about altcoins? Because I think you guys also were favorable towards certain altcoins.
Yeah, we are. I mean, it's hard. I think this whole space will look very different in 5 years than it does today, and even more different in 10 years than it does today. But we at Strix are not particularly fond of the idea that there will be one currency to rule them all. We think there are reasons that multiple currencies will continue to persist. And, we're particularly excited about the DeFi ones, but, decentralized identity is another very interesting area that we're looking at. And I think it's kind of necessary to take the next step in DeFi. So it's all interrelated.
Yeah. Now, I know as quants, you guys have your heads in the data and, the algos and everything. But I think what this week really hammered home for me, as well as the collapse of Terra, is how important these sort of larger than life personalities can be in crypto, whether it's FPF or Do Kwon. And especially, these flame wars break out on Twitter between, Do Kwon and his critics, and now, as you pointed out, Binance and FTX. And it's almost like this kind of machismo, bravado, alpha male battle that goes on and really can cause some destruction in the whole space like we've seen. So, Sadie, I'm curious how you think about that specifically. A level-headed woman surrounded by a bunch of bros, duking it out on Twitter. How do you sort of incorporate the risk of all of that into what you do?
Yeah, the story of my life, being surrounded by a bunch of bros. I mean, being a woman in technology to start was big enough, lack of diversity. And then I went into crypto, just because it wasn't bad enough. But I have to say, I don't work with bros. I would not describe Nico or any of our team as bros. Thankfully, they're fantastic. But
Mike's a bro.
Hey. I have 5 brothers, so I am a bro.
That's what I meant.
That 5 brothers. That's a lot of men in one room. So really, I mean, Satoshi Nakamoto had it right by building this amazing ecosystem and then never revealing his, her, or their identity. Satoshi's not out there influencing what's happening, which is truly magical. Like that is the only reason I'd want to meet them, is to find out like, how did you, when things have gotten so crazy sometimes, like how did you keep your mouth shut? But, I think some of these projects where the influencers get a little bit larger than life and they get too focused on their social following and less focused on the business, that's definitely hasn't ended up being a good thing in almost any context. So, going forward, it's something to really kind of look at more of like, hey, who, is the head of this project getting a little bit too influential? And the holy grail right now in crypto is valuation. What are the fundamentals of crypto? What are the fundamentals of evaluating any specific crypto asset? And we don't have that. I mean, in traditional markets, you have the CFA Society, and that's like, we have experts basically who can value assets, and in crypto we don't have that. There's just, everyone kind of uses a different methodology. Everyone has their own quantamental methodology, but when it comes down to it, there isn't really a tried and true valuation methodology for crypto. So we have to use sometimes some of these more, like, I guess, non-traditional ways of evaluating a project, and the who's leading it and how influential they are is probably going to factor into that a little bit more than maybe it would have previously. There's a lot of strategies out there that use social sentiment and social indicators. I'm not saying we're going to go into that direction because we haven't before, but it's definitely proven in the last 6 months at least to be somewhat of a negative indicator if the leader has a little bit too much of a voice and a platform.
And it definitely makes our jobs harder, I think, for me and you, Mike, at least.
But on the flip side, it's those big personalities that also draw the capital in to begin with, So it's kind of a dual-edged sword, I guess.
Yeah, that's a good point. You do need to have that charisma. People. I was talking to a VC investor recently, a very prolific investor here in Europe, and his comment was, I just write checks to people. I don't even listen to their idea. If I like the person, I think they've got potential, like I write that first check, and then I write the second check once I see how good their idea is.
Wow.
So you do need that personality for a lot of that money to come in.
That's fascinating that's the decision.
Reminiscent
no one would
of
ever
WeWork.
write me a single check, Sheldon.
No, I never have. I certainly never would. But Sadie, maybe you can just talk about what some of the, in your estimation, are some of the unanswered questions that we still have with everything that happened with FTX. Obviously, the word regulation gets thrown around a lot, but it's not so obvious what that might actually look like. Do we potentially see more regulation of these centralized exchanges? And what else would you like answers to? What questions are out there that you'd like answered still?
So I think really a lot's going to come out in the next week or two about the handling of the situation. Hindsight bias, we can go back and try to figure out what happened. It'd be really great to understand the Alameda FTX transactions and how some of that came to be. It'd be great to understand a little bit more why Binance made that offer and walked away so quickly. There's a lot of rumors around that, and but in the end, like, I don't think we'll ever truly know. We're going to know. There's what the famous quote. There's what I remember happened, what you remember happened, and then there's what actually happened. So we're going to get a lot of that, I think. But the unanswered questions are really how are they going to deal with it? We've got some examples of what I consider to be a really respectable way to handle a disaster like this with how Voyager has handled it. Steve at Voyager, I think, is a very, very admirable person. It was really hard to see him go through that, but I feel like they have done a really great job of trying to be as transparent with their customers as possible. Others who I won't say because I don't want to.
You can say the names. Go ahead.
All right. So Celsius is I think on the opposite spectrum where what they've done to customers is really hard to see, and I don't believe have cared that much how it's impacted customers, and the transparency just hasn't been there. So, I'm really hoping that this FTX situation resolves and that they can restore confidence. And no matter what happens, I think you asked about regulation. No matter what happens, regulation is coming. It's always been coming, especially for people in the United States. Like, if you want to be in the United States and stay in the United States and be in crypto, you just have to know that regulation's coming. It's just a fact of life. And we might not like it in some aspects, but it is there. And it is a protection for investors.
Right. And, that whole narrative seems to have shifted over the years. It seemed to be at first, the lack of regulation in crypto was sort of a big selling point, relative to the hundreds and pages of regulation in traditional markets. But one thing that occurred to me this week is, and it's, I think it's occurred to others over the years, is that crypto seems to be stumbling into the problems that TradFi had solved with regulations in the past, as annoying as those regulations can be. And one of them that really springs to mind to me this week is this notion that, what is SBF's empire? It was an exchange. It was a trading shop. And, within all crypto exchanges, there's also basically a brokerage element as well, where, should the regulations go where, you're either an exchange, you're a brokerage, or you're a trading firm, and not a combo of the three? Is it too risky to sort of have all those businesses sort of, if not under one roof, at least under one sort of central control of an individual like SBF?
So having separation is kind of a basic principle of business. Really any Sarbanes-Oxley and a lot of other, a lot of other regulatory requirements really are focused on, business controls and segregation of duties. And, in a highly regulated industry, there's still, moments where there's just that temptation to sort of, play in the gray areas. And, inevitably it tends to hurt clients and retail customers and investors. So I think there is inevitably going to need to be regulation. There's a tendency, I think, to over-regulate in situations where you don't understand the nuances of an industry. That is one thing that I worry is going to happen right now with what happened at FTX. I'm afraid that, there's going to be a little bit of a knee-jerk reaction to over-regulate. Some of those protections are really, really important for our investors. And, we've always been compliance focused and compliance first. We've never, we have a fully engaged compliance firm, that's on call for all of our questions. We have 2 different legal teams that we work with. So we're always trying to make sure that we're playing within the rules. But there are a lot of people out there who feel the opposite. And I know, Sam Bankman-Fried actually got hazed pretty badly recently for being pro-regulation, ironically. So
yeah. Go long lawyers is the way to play crypto, I think, Vildana.
Yeah,
how do we do
crypto
that?
Lawyers.
Well, a rough week indeed. Nico, I assume you're not ready to go back to Iraq after this week, but Sadie, are you tempted to go back to IBM after a week like this?
No. I do joke that's my fantasy occasionally when I'm just like, I've worked like a 20-hour day and I'm, the markets never stop. And I'm like, oh, maybe I'll just go work for Amazon. Like, that just sounds like really relaxing. And then I just laugh. I'm like, yeah. And in 2 weeks I would be going crazy again. Because I love the crypto world. I love blockchain. I'm so passionate about what we're doing. I love going to work every day. And I think I would absolutely go crazy if I ever had to take a job that was, at a big corporation and wasn't playing in this space.
Wow. What a segue. Speaking of going crazy, Vildana.
Wow. That's really good.
Right. I think she planned. You think she planned that?
Did you plan that, Sadie?
It is that time for the craziest things we saw in markets this week. Pretty normal week, though. Nothing crazy, right?
Nothing crazy. Nothing at all. I actually have 1 million things.
1 million crazy things.
I have 1 million crazy
things. Well,
things.
I know I'm going to need you to narrow that down to one. Maybe 2, if you got 2, maybe.
I have 3. How about that?
All right.
But one is from a listener.
Okay.
Brian Reichholf. I hope, Brian, I'm saying your name correctly. I always say that. He flagged to us that the Ontario Teachers' Pension had invested in FTX. That was going around Twitter as well.
A big pension invested in FTX?
Yeah.
Yeah.
For mine, I had, so Sam Bankman-Fried, there had been so much about how he was this grand billionaire. He'd been worth something like $26 billion up until very recently. And he suffered midweek a 94% drop to his wealth. And he, as of Wednesday, I think he had been worth somewhere around $1 billion. On Tuesday, it had been $15.6 billion. And it was the biggest one-day collapse ever among billionaires tracked by Bloomberg.
I think there's speculation that it might actually be a negative.
Yeah. No, for sure. But just the drop is so...
So, he should not go near any Ontario teachers. I would avoid the entire Ontario school system if I were him. How about you guys? What's slim pickings this week? I know, but what's the craziest thing you guys saw this week?
So I was reading today about this jewel called the Fortune Pink, which sold at a Christie's auction as 18.18 carat pink diamond.
Oh, it's mine. I put it up for auction.
Well done. You did well on that. So it sold for $28.5 million. And I just kind of laughed a little. Well, I think it's funny because every time I'm trying to explain like NFTs or crypto to someone and they're like, but how does it have value? And I'm like, well, here somebody paid $28 million for a shiny pink rock. Like
for a rock, right?
I mean, how does that make sense?
But it's a beautiful rock.
Exactly.
That's true. That's a great comparison. I always say baseball cards. What's Babe Ruth baseball card's a piece of cardboard, but what's the value to a collector? So, I guess a giant pink rock, especially that's got to tire your hand out wearing that around.
It tires my hand out a lot. Yeah,
I'm sure. How about you, Nico? Anything crazy this week?
Yeah, I was thinking about this and I could not think of anything crazier than what's already been a topic, but the CEO of one exchange tweeting out that they were going to sell $500 million of another exchange's cryptocurrency, resulting in a 1800 style bank run that completely bankrupted FTX.
Yeah,
has got to be the craziest thing this week.
I know the whole show is the craziest. I give it to you, Nico. Sometimes the obvious in plain sight is the winner, but I think we're all kind of speechless after this week. Wow. I'll give you mine. I will say the only thing that rivals crypto sometimes for craziness is the art market. I love the art market.
Mm-hmm.
So Paul Allen, the co-founder of Microsoft, passed away, and his estate sold his art collection. So, Vildana, do not look over at my notes here.
I'm not looking.
Don't looking. No peeking. But it's time, and I regret to inform you, Sadie and Nico, you're now contestants on our little game show here called The Price is Precise.
Not The Price is Right.
Right.
This is different.
Yes.
But the same.
Yes. The bull market for lawyers insists that we change the name. What do you suppose the total value when it went up for auction at Christie's on Wednesday evening, total value for Paul Allen's art collection?
How many pieces are part of it?
60 artworks.
I'm going to go with $248 million.
$248 million. That's a very precise price right there.
We're playing price is precise.
$248 million. Okay. The other two contestants, Sadie, what's your guess on Paul Allen's art collection?
So I believe I've heard from a couple people that he had really great taste in art, or he had quite a collection. So I'm gonna go much higher. I'm gonna say
I want to revise mine.
615 million.
615 million. You're not allowed to
Sadie's
revise it. No,
revise.
your bid is in the books. Your bid is in the books. Nico, this is your chance to show up the CEO here and prove why you deserve to be the chief investment officer. What's your bid for Paul Allen's 60-piece art collection? And remember, Price's precise rules are similar to another game show you might know. So you could go $1. You could go $1 above the highest bid.
Yep. Yeah, I'm gonna go with $750 million.
All right. You're all way off the mark, but Nico's closest. $1.5 billion
What?
for Paul Allen's
Wow.
art collection. Isn't that nuts?
Oh,
One of the biggest
lost.
ones, Birch Forest by Gustav Klimt. Klimt? I hope I'm saying that right. $105 million. $1.5 billion for an art
Wow.
collection. Isn't that crazy?
yes. I bought it all, by the way.
You hawk that diamond?
Yeah, I was walking around with my pink diamond, and yeah.
Now you need a bigger apartment to
Yeah.
display it all.
Yeah.
Sadie and Nico, we can't thank you enough. I know it must have been a stressful week for you, and you probably last thing you wanted to do was rehash it all on a podcast. But we really appreciate you taking the time and helping us understand what a crazy week it was.
Yeah, thanks for having us.
Absolutely. Thank you for having us.
Yeah, thank you guys.
What Goes Up will be back next week. Until then, you can find us on the Bloomberg terminal, website, and app, or wherever you get your podcasts. We'd love it if you took the time to rate and review the show on Apple Podcasts so more listeners can find us. And you can find us on Twitter. Follow me at Reganonymous. Vildana Heinrich is at Vildana Heinrich. You can also follow Bloomberg Podcasts at Podcasts. What Goes Up is produced by Stacey Wong. Thanks for listening. See you next time.